Lot size. There's not too complicated explanation on this. Lot size is what you use in opening a particular position. In the forex market, when you buy from this point, you are putting your money on the fact that the market will go upwards from this point upwards, and when the market is above that particular price you bought that particular asset, let's say you bought the particular asset at $1, when the price goes above $1, even if it's 1.01, you're in profit. But since you said the market will go upwards, you put your money on the fact that the market will go upwards, and then the market went downwards. Even if it's 0.9, you are currently in loss because you put your money on the fact that the market will go upwards, but now the market is coming downwards, so you are currently in loss. All right. But what you use in putting your money on the fact that the market goes upward, what you use in doing that is called lot size. Lot size. So basically what lot size is that you are determining how much you want to make from that trade. So you don't need to think too much on it. The lower the lot size, the lesser the money. The higher the lot size, the higher the money. All right. So if you want to open a position, just simply click on this symbol at the top right corner of your screen that looks like carpet. Then for this trade now, let's say you want to put your money on the fact that the market would come downwards. And remember, if you are saying the market will come downwards, if you are putting your money on the fact that the money will come downwards at a particular price, let's say at the price of $1, when the market price goes below that $1 you bought the asset, you'll be in profit because you put your money on the fact that the market will come downwards. And if you are putting your money on the fact that the market will come downwards, what you are doing is that you are clicking the sell button. If you are putting your money on the fact that the market will go upwards, what you are doing is that you are clicking, what you will do is that you click the buy button. All right. Upwards is buy, downwards is sell. All right. So if you put your money on the fact that the market will come would come downwards, would sell, for you to make profit, the market has to be below the particular price you bought that asset. So if you bought that asset at the price of $1, if the market price goes to $0.9, you are in profit. But if the market price go above that $1, let's say 1.1, you are currently in loss. Currently in loss. You understand? Currently in your loss. If the market price goes to 1.2, you are currently in loss. But if the market price from 1.2 goes back to 0.9, 0.8, 0.7, you are currently in profit. All right. So let's say you want to take, so same thing for buy. You buy an asset at $1, you are putting your money on the fact that the market should go upwards, and if it goes upwards to 1 point, and let's say you bought the particular asset at $1. So if the market price goes upwards to 1.1, you're in profit, 1.2, you're in profit, 1.3, you're in profit, 2.3 points, you're in profit. But if the market price goes below that particular price you bought the asset, let's say $1, let's say 0.9, 0.8, 0.7, you are currently in loss. Why? Because you put your money on the fact that the market would go upwards. So for you to make money, the market has to be above that particular price you bought the asset. But now when you find the market price below the particular price you bought the asset, whereas you put your money on the fact that the market will go upwards, and now the market price is now below the particular price you bought the asset, you'll be in temporary loss because now the market price is currently below the particular price you bought the asset, which means that the particular price you bought the asset is putting your money on the fact that the market would go upwards. So the only way you are going to make money is if the market price goes upwards above that particular price you bought the asset. If you find the market price below that particular price you bought the asset, it means that you are currently in loss. All right. So if you are putting your money on the fact that the market price will go upwards, you are clicking. You should click the buy button. If you are putting your money on the fact that the market price should come downwards, you should click the sell button. All right. So if you are putting your money on the fact that the market price will come downwards now, that is, you want to click the sell button. What you use in what that money you put to say that the market price will come that way, that money you put is called lot size. So what you used to say, yes, from this point, from this particular price, the market price will come that way. So that money you use in in saying this market price would come downwards from this point, because it is money you use. What money is that? That money you use in saying from this point the market price will come downwards. That money is called lot size. For explanation sake, all right. For explanation sake, let's say money. All right. That thing you use is called lot size. So when you put your money on the fact that the market price will come downwards, that money used to say yes, from this point the market will come downwards, it's called lot size. So just like you, let me use real world scenario. Those who play betting, who engage in gambling, and of course I don't recommend people doing gambling. I don't recommend people betting, all right. But people who bet, if they should put their money on the fact that, for example, Chelsea would win a particular match, they use, for example, 100 naira, 100 Nigerian naira. They would probably, let's say they are supposed to make, for example, 5,000 naira from that, for example, and because the 5,000 naira for that, they are making 5,000 naira from that particular bet. Why? Because they put 100 naira. When now they put 2,000 naira, what they will be making will be more than 5,000 naira. What they will be making will be more than 5,000 naira. It will be what? 100,000 naira. So what a particular match they put 100 naira, where they are going to win 5,000 naira. If they are to put 2,000 naira in that same match, 2,000 naira, they are going to make 100,000 naira and not 5,000 naira. So that money you put to say that this is what will happen in the market, that money in the forex market, in the synthetic indices market, is called lot size. I like to use the word forex, but I trade synthetic indices market. In fact, if I can trade anything, but when I'm explaining, even if I'm explaining in terms of synthetic indices, I use the word forex. Why? Because that's what many people understand. If you should say synthetic indices, people might not understand what you are saying, but for the purpose of understanding, I use the word forex, even if I'm making reference to synthetic indices. But what I'm explaining now explaining is universal. It's for forex market, it's for the synthetic indices market. All right. If you are trading crypto in the financial market, if you are trading crypto in the forex sector, if you are trading a crypto in the forex sector, that when I say forex sector, that is in sectors like this, where you are putting your money on the fact that the market goes upwards and downwards in a broker. Yeah, let me use that word. If you are trading crypto in a broker like Derive.com, then it's the same thing, because when you're trading crypto in a broker, it means that it means that you are trading, you are using lot size to trade. All right. So that money you put on the fact that the market will go upwards or the market will come downwards is called lot size, and the lot size you use determines how much you make. So if you are using 0.5 lot size to make $100, if you increase that lot size to 0. If you increase that lot size to 1 lot size, let's say you made $100 from that trade. If you on the next trade, if you should see the same trade again and you use 1 lot size for the same trade, exactly the same trade, like let me just say, if you used one lot size instead of 0.5 lot size, where you made $100, you'd have made $200. Do you understand? You used 0.5 lot size to make $100. If you had used 1 lot size, you would have made $200. If you had used 2 lot size, you would have made $300. So that's it. Lot size is what you use lot size to determine how much do you want to make in this market. How much do you want to make? So you determine that, and you also by the lot size you use, depending on the lot size you use, that's what will determine how much you are risking in the market. So if you use 0.5 lot size and you are risking $2 for that trade, you are risking $2 to make like $100. And then you did not use 0.5 lot size. But if you had used 0.5 lot size, you would have been risking $2 to make $100. Now, if you use $1 for that one lot size, I mean not dollar, lot size, not dollar. If you use one lot size where you if you use one lot size where if you use 0.5 lot size, you'd risk $2 to make $100. That particular trade, if you risk $0.5, if 0.5 lot size, 0.5 lot size, if you use 0.5 lot size, you'll be risking $2 to make $100. That particular trade where you use 0.5 lot size, 0.5 lot size to risk $2 to make $100. If you use one lot size in that particular trade, you no longer be risking $2. What you'll be risking is $4. What you'll be risking is $4 to make what? $200. Do you understand? So this is what lot size is. A trade where you use 0.5 lot size to risk $2 to make $100. If you use one lot size for that same trade, you'll be risking $4 to make $200. That same trade, if you use two lot size, that same trade, if you use that same trade, if you use a 1.5 lot size, I hope I'm getting this correctly. That same trade, if you like, in terms of what I'm about to say, that's what I'm trying to say. Like, if you use 1.5 lot size, if you use 1.5 lot size for this same trade, you'll be risking $6 to make $300. I don't know if I got that calculation correctly, but you get the point. You can probably check if I got it correctly. I'll still check later, but it doesn't matter whether I got it correctly or not. But you get the point. This same trade, if you use 1.5 lot size, you'll be risking $6 to make $300. That same trade where you risked 0.5, where you used 0.5 lot size and you were risking $2 to make $100. That same trade where if you should use 0.5 lot size, you'll be risking $2 to make $100. That same trade, if you use 1.5 lot size, you'll be risking $6 to make $300. That same trade, if you use one lot size, you'll be risking $4 to make $200. That same trade. If you use 1.5 lot size, you'll be risking $6 to make $300. So you get the point. So this is just what lot size is. What do you want to do? That's the question. Then do it with the lot size. Calculate it and then do it with the lot size. That's what lot size is. I don't know if I explained lot size previously in one of my videos, but I was checking it today, and I don't know, probably I explained it in one of the videos, but just in case I did not, I'm doing a video again to explain it. So you understand. So this was lot size. So let me show you practical. And also, if you want to take a trade now, so let me just take this back. If you want to take a trade instantly, if you want to open a position instantly, market execution, all you have to do is click on this panel, this button at the top right corner of your screen. Then you'll see the buy button, you see the sell button. So like I said, what do you want to do? After you have analyzed your chart, you have done technical analysis, you have done your analysis, you have analyzed the chart, you've come to a decision, you've come to a conclusion or a thought. That, let me just say a thought, or let me just say a conclusion, conclusion or thought, that you've come to a conclusion. Let me say conclusion. You have come to a conclusion where you are certain to a certain degree that the market would come downwards at this point. So because you are now certain at a certain degree that the market will come downwards at this point, if you should take a sell at this point, if you should take a sell with a certain lot size at this point, the market will come downwards. All you have to do now is execute your analysis. And how do you execute your analysis? You click on the button, like I said earlier, at the top right corner of your screen, to bring this panel out where you see the buy button, at the sell button. Remember, if you click the buy button, you are saying the market will go upwards. If you click the sell button, you are saying the market will come downwards. But how are you saying the market will go upwards, and how are you saying the market will come downwards? What are you using to make that statement? What you are using to make that statement is lot size. That's what you are putting. That's what you are using to put. That's what you are using to say the market will go upwards. That's what you are using to say the market will go upwards. The market will come downwards. All right. So at this point now, let me say the market will go downwards. At this point, let me say the market would go downwards at this point. At this point, let me say that. So let me use 0.5 lot size. So this is it. This center button, this center space you see here is lot size. So you can change it to whatever lot size you want to make use of, to 1 lot size, 2 lot size, 3 lot size, your choice. But I think the lowest lot size for this particular asset is 0.5. How do you know the lowest lot size of a particular asset? You simply click on quote at the bottom left corner of your screen. Then what asset is that? Okay, the asset is volatility 25, as you can see at the top left corner of my screen. So simply click on quote, tap and hold on the asset, tap and hold on it, then click on properties, then scroll downwards to where you see minimal volume. So the minimal volume, that is the lowest lot size for volatility 25 index is 0.5, and the maximum lot size you can use. So this minimal volume you see here is the minimal lot size you can use to open a position for volatility 25 index. The minimal volume is the minimal lot size you can use to open a position in volatility 25 index. Minimal volume. Then the maximum volume is the maximum lot size you can use to open a position in volatility 25 index. All right. So now that we understand that, so now that you understand that, you now see that 0.5 is the lowest lot size of volatility 25 index. 0.5. So I can decide to use 0.5 to open this, to put my money on the fact that the market will come downwards. All right. So let me put my money on the fact that the market will come downwards using 0.5 lot size. So how do I do that? I'll simply click on the sell button. I haven't inserted my lot size, so I'll do that now. Boom, I've done that. As you can see, the price in which I opened the price in which I sold this asset, the price where I put my money, which is 0.5 lot size, on the fact that the market would come downwards, is what? 2834.58. Okay, I don't think I'm seeing that correctly. Let me just simply click on trade below, then tap on the position that you opened. Or probably if you don't vote tap itself, it's already here. You see that at this left hand side. Look at it here. So the price where I sold this asset, the particular price I sold this asset, at the point where I said from this price the market would come downwards, is 2834.438. As you can see, 2834.438. That's the particular price, the particular asset where I said the market price of volatility 25 index will start coming downwards. As you can see, look at the price here at the right hand side of my screen. Can you see that? So I can simply click on it now. Click on the price. I can simply click on the price. Where the price? The price is the dash line you see. This dash line you see. That dash. Click on it. Then click on SL. Click on SL, which is stop loss. I think I've explained stop loss and take profit before in one of my videos, but I'm just only putting everything in this video. Then click on SL. Then set how much you want to risk in this particular trade. So we are using 0.5 loss size. So for this 0.5 loss size, how much are we willing to risk? So I can put my stop loss above this place and then click on TP. TP is where the market will reach and where the market should reach, and the algorithm should automatically help you close the trade in profit. All right. So when the market price reaches, for example, the particular place, and that's where you put your take profit price. TP means take profit price. SL means stop loss. So if you put your take profit price here, you are saying that when the market price reaches here, the algorithm, the code, the market should remove it from the market in profit. So let's do that. Let me just do that. Then after you are done, click on this arrow here. Then click on modify below. Then you can click on add. Click on done. Okay, I don't think done is a button that can be clicked. But look, if I click on the price again now, you'll see. So for this particular trade where I opened with where I put my money on the fact that the market is coming downwards, where I sold this volatility 25 index at a particular price, which is 2834.438. I sold this particular asset, volatility 25 index, at 2834.438. I sold it at that price. I said at this price, from this price downward, I said from this price the market should come downwards. That's what I said. I said from this price the market should come downwards. From this price the market should come downwards. And I put what I used to make that statement is 0.5 loss size. And by using 0.5 loss size, then when I use 0.5 loss size, I then said, okay, the market, even if the market should go upwards above the particular price where I sold the asset, I will be in loss. Yes, but I'll be in temporarily loss. Yes, but there is a certain kind of loss I don't want to incur. I don't want to be in. And the type of loss I don't want to be in is a loss where I'm seeing -5. But how do I stop myself from seeing -5? I have to make use of the stop loss system, which is this SL, which is why I'm putting my stop loss here. Because look at this. Let me click on the SL. Let me show you something. When the market price gets to this point, look how much I will lose. When the market price gets to this point, I will lose $5.87. 5.87. So I don't want to lose $5.87. So for me to control my loss, because stop loss helps you control your loss, I want to get a lower loss. I want to accept a lower loss than the bigger loss I will sustain if the market price goes upwards to a certain degree. So I don't want to incur $5.something loss. I don't want to incur big loss. So I'll simply just put my stop loss here, so that by doing this, I'm deciding what loss I am ready to sustain. So stop loss gives you the ability to determine the loss you want to sustain. So if I put my stop loss here now, I'm saying that I'm willing to lose what? 2.66 USD. 2.66 USD. But if I put my stop loss here, I'm saying that I'm willing to lose 5.01 USD. Now, in a scenario where you don't even put stop loss at all, you don't set stop loss at all, and let's say your account balance now, for example, as you see here, this account balance is like 10K plus, $10,000 plus. You don't put stop loss, and the market price, you said the market would come downwards from this price. You sold the asset, and the market price kept on going upwards, opposite to what you said. The market price kept on going upwards. It entered -5, it entered -6, it entered -100, it entered -500, -600, -800, -900. It entered -8,000, it entered -9,000, it entered -10,000. Then it got to the point where it went above your balance. That's what it means for you to blow account. At that moment, you have blown your account. Why? Because of bad risk. You did not manage your risk. Should we call it bad risk management? Yes, bad risk management, because you did not manage your risk. You did not make use of stop loss, a system that was put in place so that you don't lose beyond what you ought to lose. You don't lose beyond beyond a certain amount. A system put in place so that you determine what you lose. So not losing stop loss system to trade is very dangerous. All right, so I'm showing you everything. I think this is really really detailed, and I love it. Glory to God, glory to God, glory to Christ Jesus. So you are seeing it. So it's very important to use the stop loss system. Very important to use the stop loss system. All right, so if you want to put the stop loss, remember you just click on the price, your entry price. So we call this entry price, the price where you said from there, from this price the market price would go downwards. That price where you said from this price the market price will come downwards, that price is called your entry price. All right, that price is called your entry price. So if you want to set your stop loss, simply tap on your entry price and then click on SL. Then set your SL to where you want to set it. Determine determine how much you are willing to risk in that particular trade. Then click on this. Then 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 click on the arrow. This arrow here. This blue arrow right here. Then click on modify. You can click on add, no problem. All right, so this is it. So when the market price comes downwards to take profit, as you can see, I'm already in profit. Can you see it? Why am I in profit? Look at the current price. Look at my entry price here. The price where I said from this price the market price will come downwards. Look at my entry price and look at where the current price is. The current price, where price is currently, look at where it is. You can see that the current price is below, is lesser than my entry price. Look at it. You can see that the current price, the where price is currently, is lesser than my entry price. The price where I said from this price the market price will come downwards. You can see that it's lesser. You can see it. Observe, you can see that it's lesser. The current price is lesser than my entry price, because when your entry price is here and when your entry price is here and the market is coming downwards, what's that? It means that the current price is lesser because it's coming down. It's lesser than your entry price, lesser. But if you had bought from this point now, where you said the market price from this price would go, from this particular price it will go upwards, when you are in profit, it means that the current price is greater than your entry price. The current price is greater, higher, as you can see, higher than your entry price. The price where you said from this price the market will go upwards. All right, so now when the market price, you can see that I'm currently in profit. And why am I in profit? I sold the asset, and the particular price where I sold the asset, where I said from this price the market will come downwards, the current price is lesser than that price. The current price of the asset is lesser than my entry price. All right, so you can see that I'm currently in profit, and that I've explained with the reason. And now when the market price gets to my take profit price, my TP, when it gets to my TP, the market would automatically close the trade for me in profit. So let me show you. Let me put the TP here. Let me show you so that you see it in real time. If the market price is going to get to that point, I adjusted the TP. I adjusted it inside the candlestick so that, for explanation's sake. So watch what is about to happen, because I think that's how the market price will quickly get to the TP. Okay, watch. Let me adjust it upwards so that you see. Watch. Are you seeing it? Why did it not close? Close now. I can see. The market has automatically closed the trade for me. The market has automatically closed the trade for me, as you can see, in profit. 1.78 profit. You can see this is the total profit. What you see at the top is the total profit that you have made for a range of a period of time. It could be only today, it could be from last week, depending on how you set it by clicking on this button at the top right corner of your screen, and then you set the duration. You can set from last week, from last month, last 3 months. You can even set a custom period. All right, so as you can see, it's currently at today. So this is today. So it's currently at today. So the total profit you see at the top is for today. So this is it. This is about lot size and how to open market, also how to open a trade using market execution, how to open a position using market execution.